The housing front from Fannie Mae or Freddie. Well, that's not fair. There is help on the housing front from Fannie and Freddie, but not as much as some would have wanted.
Because the loan remains, as far as jumbos are concerned, anything $417,000 and above. So will this push the price of homes down further? And we know they're falling anyway. Our Fox panel back now to discuss this. And Mike Santoli, what do you think? Does this only make things worse for home pricing?
It doesn't give the housing market marginal help that it could otherwise have given it. I don't think the reason that house prices are going down right now is because Fannie cannot actually buy larger mortgages. It's because the demand for homes is not there. The artificial demand from junk mortgages for people who couldn't afford the homes have gone away. Today's consumer confidence numbers showed only 2.5% of respondents were in the market to buy a home, as low as it's been since 1994. It's not because of Fannie and Freddie.
Peter Schiff, even though Freddie and Fannie, these two mortgage institutions, are up a little bit today, their market cap is minuscule compared to how many trillions of dollars worth of mortgages and mortgage-backed securities are in their control. Eventually, at some point, doesn't the U.S. Treasury come in and do something to guarantee them beyond the point at which they're already guaranteed?
We don't know. I mean, that's why when I wrote in the book Crash Proof that these two companies would go bankrupt, it's because of how small their capital is relative to the mortgages that I knew that they insured, that I knew would also go bad. So who knows if that guarantee is actually going to be there. But the problem is, if the government makes good this guarantee and tries to bail out all the bonds, all the mortgage debt,
it's impossible.
Well, all they can do is print money, and it's going to be worthless when anybody receives it. So it's really not going to be a bailout that does anybody any good. And, you know, remember, home prices that we've had over the past 5 or 6 years have been bid up to these artificial levels by these lax lending standards. And, of course, now that these lending standards are coming back to reality, prices have to follow suit. So prices have to collapse because they weren't real. They were only a function of these crazy loans.
Gary Kay, I know a lot of people who are waiting for exactly that, a price collapse so they can come in and finally buy the house that they want at a fair price. Is that the one positive out there with the housing market? I'm trying to look for something positive. A little bit of sunshine.
Well, I got to tell you, they're going to get it. Look, the market just topped 2 years ago, and in my study of bear markets for housing, usually takes about 10 years. That was the last one. And since we had the most ridiculous speculative froth in history in housing, it may take longer. I got to tell you, I've been sitting here watching Fannie Mae and Freddie Mac are going to come to the rescue. Freddie Mac just announced a $2 billion loss. Why are we going for these people to help out? They can't keep their own house in order. Look, it is a mess right now. Time will cure this. I just think it's going to take many years. It's going to continue to be a buyer's market. And what you do right now is go to the auctions, put in some minimum bids, and get some steals because you're going to see a lot of that going forward.
You know, the big problem, people keep overlooking how big an impact this housing wealth had on our whole economy, on all the consumption, on these adjustable rate mortgages, how much extra consumption existed because people were making these minimum payments. So it's not just the housing market, but the entire economy that's going to collapse with the bursting of this bubble.
Pat, go ahead.
I think we're getting way out on a limb here. You know, we are in a corrective phase of the real estate market. It's probably not going to be over anytime soon. And while easy credit and cheap credit has really been a contributing factor, the fact is that a house is not just an investment. It's where you live. So even with prices coming down, people are not flocking to sell their homes and move into apartments. It's where they live, and it's one of the things that's probably going to moderate the decline in housing. I think the other thing that's really a silver lining, and I know I'm stretching maybe to call it a silver lining here, is there's too much wealth that people are accumulating in homes, and they really need to look at alternate investments. And this cheap money made them go more into housing and less into alternative investments.
Also, on the bright side, 20 to 25% of homes bought in the last 3 years have been investments. They were not actually where people were living. That's a good thing because that's where the foreclosures are happening.
And
it's not people losing their homes. No, that's not
but should the taxpayer be bailing out the speculators?
That's not really what's going on.
It may go on. That's what some politicians are suggesting.
They're getting foreclosed upon and they're losing the investment.
They will have to bolster Fannie Mae or Freddie Mac. They cannot let them go under. Those guarantees guarantees would have a tremendous ripple effect throughout the entire economy, including mortgages. I'm sorry, including pensions. So it wouldn't just be isolated to real estate. That could be a catastrophe. There's no doubt we will bail them out.
Gary Kay, last word. Gary Kay.
Just watch the inventory numbers. They are growing leaps and bounds. I'm here in Florida where there was massive overbuilding. They cannot get rid of product. They're actually tabling product that has been built. It is going to take a while. It is just a fact of life. I'd like to be positive. It's just not there just yet.
All right. Well, it is positive, as Liz said, if you're looking to buy something.
I know a lot of people. It's a matter of whether they'll get credit if it's so tight at this point. Hey, we want to look at